Hi, this is Mogan Kumar from Rainy Bulls. I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, we are going to look at the Nifty chart for April 20th and see what kind of signals, the entry and exit signals, the Triple Threat Strategy has given us. So let's have a look at the chart. Great. So this is the trading view chart. It's a two-view chart. We have the Nifty part, Nifty futures, right, side by side, set to a 3-minute time frame. So I have hidden the indicators. So before we bring them on, let's look at the price action for April 20th, right? So it opened, and the price actually saw some major resistance, and it had a sharp fall. It was a significant fall from the top, right? It even broke the morning range low, right? And then it took some kind of support here, and this acted to be as a strong support, as you could see, and the price moved higher from here. So it's everybody's wish to actually, get into this particular trade, right? It's a beautiful move to the downside, and then yes, capitalize on every single opportunity that the market presents. That's a second opportunity, and this is a third opportunity, and of course the fourth opportunity is this. How about we having a powerful strategy that's going to show us signals as to enter at this point, take profits right here, and again enter right here, take profits right here, right, enter right here, take profits right here, and again enter at this point again and take profits right here. So how about a strategy? How about a set of indicators, part of the strategy that gives us clear entry and exit signals to take trades? And on this particular day, there are four opportunities. Let's see, what the strategy has shown us. Okay, so I'm just going to clear the drawings out. Give me a second. Perfect. So I'm just going to bring on the locations indicator, right, on both the charts, and I'm going to bring on the participation indicator, and the third being the trend meter. Okay. And in my previous video, I've talked enough about what these three indicators are, how significant they are, when it comes to reading the signals out of them. So just please refer to my previous videos in the same series of Nifty chart analysis to get a better understanding of what these three indicators are and how you have to look at the signals. Okay, so let's quickly jump into this the price action. The price opened between the CPR, right, and the previous day high. Okay, and it had a sharp move towards the previous day high, and as you could see, there was some consolidation. So like I've been telling in every single video, for the first 30 to 45 minutes we simply observe the market moves, the price action patterns, and what exactly the price does. We don't right away jump into the trade during the opening 30 minutes. So past 9:45 is when we actually plan our trades. And as you could see, there is a beautiful move to the top, and then the price took some kind of resistance. The reason for this particular place for the price to see resistance is, we discussed about this in our videos, it's the virgin CPR, right? So it's one among the three locations that we bring from the past, okay, which is the virgin CPR happens to be one of those, right? And again, this virgin CPR will have it's a strong location where the price could see some kind of resistance, and that exactly what happened this particular day, right? The price saw some great resistance, and you could see the kind of hammer candles, the candlestick pattern. Again, we talk about three major candlestick patterns, right? And the most preferable is the hammer candle, right? It could be a reversal hammer, or it could be a pin candle, which is at the bottom. So this one happens to be a reversal hammer, right? An inverted hammer is what we call them. And you could see an inverted hammer with a lot of participation, right? The blue dot is significant, and this clearly gives us an indication that participation coming at a major location with a candle pattern, inverted camel, the candle pattern, it all confirms that the price is not strong at this point to actually go higher, but rather it's going to fall, right? And as you could see, around 9:45, this is the candle at 9:45, and this candle broke the lows of all the the inverted hammer candles with a huge participation, right? It also broke the previous day high. Now this is where you could have actually taken your first trade. Okay, so this is the place you take your trade, this candle right here. Okay, and look at the trend meter. At the same time, it's all peaked out. The trend has already given up right at the top. As it was consolidating, the trend, actually the trend meter gave a signal that it's sliding down. And with all the confirmation that we have, location, participation, trend meter sliding down, and with candlestick pattern, this is a high probability setup. And you're always going to risk one candle, right? So you're going to take the trade with a stop loss to be as the top of this candle, and the entry is right below this candle. And you stay in this trade as long as the trend meter gets into the green zone, which is the bottom, right? And if the price reaches to the bottom, the price has bottomed out. And you could see when the price moved to the bottom, this is where you see a lot of action, right? You could see a lot of participation. You could see the volume candles that has kicked in. And this exactly is the place where you take your profits, right? This is the place where you take your profits. So it's a beautiful first trade, right? That you caught in the morning. And let's see, what are the opportunities we have. Let me clear a few drawings here. Okay. Okay, great. So, excuse me. So when the price reached to the previous day low, which is a major location, so we don't get into the trade right away, looking at the trend meter, the candle, and all of that, right? Because the trend in the morning trend is so weak. I mean, it's to the downside, and we do not know if the price is going to have a strong reversal to the upside, right from here. Because look at the EMAs, it's all sliding down. We are below a major support, which is going with major, location, which is the CPR. So the price steering through all these locations, the sliding EMAs and the central pivot range. Now there's a low chance of doing, that, right? So we give the price some kind of, time to give us some signals as to what the price is about to do. So as the price moved towards the green moving average, the price again saw some resistance. That's expected, right? That's what we keep discussing in our webinar, that we need to give the price some time to retrace back to the moving averages. And when it comes and comes to the same low point as before, and it gives us some signal of entry, that is when we take our chances. So trading is a game of probability, right? And that's why we are making that probability higher with the help of the indicators. So we have three indicators, and hence we have three conditions based on these three indicators, based on which we enter and exit, and that's why it's called triple threat. So we don't completely rely on one indicator, right? And so it's not just the indicators. We also have the candlestick patterns. We also have the price action patterns, right? And look at the hammer candle, right here. The price has come to the low point, right? And look at the trend meter. The trend has already confirmed that it is moving higher. And if at all, if you want to make an entry, it's not a high probability setup because we don't have a lot of participation that's coming in. But considering the fact the price is at a low point at a major location, right, and a pin candle, hammer candle. Now this is the second trade that you could have very well taken with a reduced lot size. If you take a 10 lot, if you usually trade with 10 lots of Nifty options, you trade with 5 lots. Um, right? So since this being a low probability setup, so this is where you could have taken the second trade, and your target, of course, should be the central pivot range, because this is a major location. The price could see some kind of resistance, and there could be some action right at this place. And also look at the trend meter; it is into the red zone, and this exactly is the spot where you could have taken your profit. So you enter here and you exit right at this point. Okay, so couple of trades you've taken for the day, right, back to back. And now let's see, what happens past this particular, time. Like it's 11:40. We have taken two trades since morning, correct? And as the price, we have discussed about when the price is kind of caught between the EMA band, right? The price is going to consolidate, And an important fact is once a major location is broken, the price, if retraces back to that location, that could act as a strong resistance. So central pivot range is a strong resistance zone right now. So we need to wait for the price action to confirm if this resistance is going to push the price further down, right? And you could see there's a lot of participation that has come in, right? And the price is seeing a lot of resistance around the zone, and the EMAs are all sliding. So this is another good entry point. And there is a hammer candle, sort of hammer candle, that's pinning down all the EMAs. So if at all you want to take a third trade, which is not a high probability though, because the risk to reward is not that great, because there is an immediate support zone where the price could see a lot of support right here and it could stall. So the kind of profit is minimal, but the risk is also very minimal. So you could take a third trade right here, right at this point, and you could actually, uh, right at this, the pin candle, this is your entry point, right? And you could actually, take your profits right here. So this could have also been another beautiful trade. There is going to be a lot of noise around this region. So the moment the price comes to this level, you could see the kind of participation it makes. The volume candle, it is all an indication. Look at the trend meter; it has also come to the green zone. So this is the place you book your profits, and you wait for further, trades based on the price action. Okay. And let's see, we don't jump into the trade. We know that it's at a major location. We see a lot of participation. The trend meter is right at the green zone. But the rule of the thumb is we always stick to the strategy, and the plan is whenever the price moves to a major location, if the price actually moves below the low point that it has created in the day earlier, right? In this case, yes, it moved further down, right? So we wait for the price to retrace back to the moving average and see what it does around those moving average lines. So in this case, the price moved swiftly back into the previous day low, right? It is now getting some kind of resistance at the green moving average. It took support at the previous day's low, and then it started moving further higher, and now it's taking good resistance at this zone, the green blue EMA. And the further price action confirms that the price moves swiftly down because of major participation here back into the previous low point that has been created, right, where we had a major participation. And again, when the price swiftly moved down to this low point, and there is a volume candle. The blue volume indicates it's a significantly higher volume at this place. And look at the kind of participation. And the trend meter again has moved down almost close to the green zone. However, the trend has indicated like a higher low, right? But the price has made to the same low point. Now, this again is a strong indication of price trend conflict, which makes the price move higher, right? We've seen in multiple videos, right? This price trend conflict, and the price is at a key location with a lot of participation. Now, this is a high probability setup, right? And the fourth trade that you would want to take is right here. You go full on, and you actually, trail your stop loss to the green EMA once it is, once the price is above the green EMA, and you close or exit the trade once the trend meter gets into the red zone, which is right here. All right. So we have taken four trades on this particular day of April 20th, 2023. So in the initial part of the video, when we looked at the naked charts, we were just wondering, whether we could take four trades, like, based on wherever, it dipped and wherever it actually, raised, and then again it fell from there, and it raised back, from the bottom, right? Like making a double bottom. And the strategy, the indicators part of that strategy gave us clear indications, where to take the trade, where to exit, right? And it's so powerful that we were able to capitalize on all the important places, right? For example, we took this first trade, and we were able to take this, another small trade here, another small trade here, and then of course the last one being pretty bigger one compared to the previous two. So we took four trades. So this exactly is how the strategy would help us. No, it's not just based on indicators. it's beyond that, right? We have the price action patterns, we have candlestick patterns, we have the moving averages. It's purely based on technical aspects. And as you might have realized, I don't look into news. I don't look into what other markets are doing during the day. There are a lot many people who look into the European markets, the European Open time, the Asian markets, how they are doing during the day. They might be doing positional trading, or they might have a different strategy. And for those who look into those, other markets and other news and stuff like that. The data points, other data points could be crucial, but to me, I'm strictly a price action trader, and I have a strong strategy that I stick to, correct? And over the years, I've used many indicators, right? And these are the three indicators which I've been using for quite some time, and I've formulated multiple strategies. And this strategy is an amalgamation of all the other strategies that I've worked on. So this is the mother of all strategies that I've built so far, and it is a very it's a high performing strategy, I would say. The risk to reward, as you might have realized by now, we always risk one candle, right? We always risk one candle, but the reward is so huge, right? No, regardless of whether it is a high probability setup or low probability setup, you always end up risking one candle, right? Like in this trade, it's just one candle, right? Again, it is just one candle, and here again, it is just one candle. But look at the rewards, right? They are multifold rewards. It's 1:3, 1:4, 1:5. It's beyond. It's infinite, correct? So you would be able to capitalize on each of the trades that you take if you seriously follow the strategy and stick to the plan, and plan each trade, okay, based on the signals you get from the strategy. So if you like what you're seeing, please do like this video. And if you are a beginner who wants to get started in the stock market, or if you're an intermediate trader, if you'd like to know more about the strategy and how to use these three indicators, please don't hesitate to contact me at my WhatsApp or Gmail ID. Okay, you could actually drop me a message to get further details about the course, and I would highly recommend you to go and have a look at the course launch and the course content videos which I had uploaded in the past, which will give you which will list out all the topics which are discussed as part of this online one-to-one private webinar. Okay, and also, I would like to say that now this particular strategy is a result of 10 years of my work. It's a high performing strategy. It uses three powerful indicators, right, which is the core of this particular strategy. So we will be discussing about all of that, and also there are other advanced topics like price action pattern, trading psychology, and a lot many topics which are being covered as part of the online webinar. Okay, so with that, no, I'm signing off for the day. Thank you so much for your time and patience. Okay, until I see you in another episode, it's bye from me, and take care of you and your loved ones.